Hi, and welcome to the Price Action Analyst YouTube channel. I just want to do a follow-up on a call debit spread that I initiated on Alibaba, stock code BABA, BABA. So I also want to, in sort of doing this review of what happened here, try to emphasize how much I like debit spreads as opposed to buying the naked options. So just a quick recap. This green line here, not that one there, it's just indicative. This is where I bought. I initiated the position. So I bought a 222.5 June 26 call, and I sold the 225 above it. Now, what was important there is that call, had I bought this call only, it was 5.27, so $527. But I didn't. I bought this call and I sold this call, so the overall position cost me 1.03 to enter, so $103. So I'm going to explain why I like the debit spread, or try to. My premise was strength. This wick indicated that the retrace was going to be very shallow, and this strength, I bought this at the end of the day where it looked like it was going to close on its high, like literally minutes before the close. And it did close on its high, and the next day you got the strength that you expect. But that was very short-lived, and price sort of peeled against me, and I was thinking about exiting the position. And then this wick formed, and I thought, I'd see what the buying strength on the wick looked like, and this happened, and then the next day. So I was holding it here. But the thing is, I don't know what the option was worth, but I mean, when I looked at it, the lowest I ever saw my spread was like 70, the low 70s. So if I had exited, we're talking about a $30 loss. That option that I paid, the $527 option, that's probably worth in the threes here. So, the absolute values of risk are much higher with the naked. So I kind of framed up this price action, and it broke out, and price, it traded. You had this weakness here, and you got subsequent weakness, and price kind of rolled over. It broke out that day, opened here, and came lower. And again here, I was just hoping that it would go up. Here my analysis here was to continue up. It pushed against me, showed strength, and here I'm just, it's hard to be objective when you're in a position. So here I'm just holding the position, hoping it'll go up, because the position only had days until it expired, so it only just needs to stay above this 225 level for it to realize its maximum value, which was $250. $250. So I put a exit in at $210. And so price went up. It was worth about $2 there, so I didn't exit. And then this morning it automatically sold me out at 210. So the point I'm trying to make here is that I made money on this. I paid 1.03. I sold it for 2.1, and so my overall profit was 1.06. So I doubled my money on this trade. So what's in, for return of income, that's, I made 100% profit on this position. Now, if you just compare that to the naked option, so that 222.5 option was worth 5.27 here. When I sold out of this position, that part of the option was worth 8.75. So, that's not double. Double would be 10.5. So this is a safer way to conduct business with higher return on income figures. If you're like, I want to make $1,000, well then you buy 10 of these here instead of one, or 5 of them, and when they get here, they're worth $1,000, and you've made more than if you just bought the option outright here. So just to reiterate, if I'd have bought that option, it was 5.7, and here it was worth 8.75. I paid 1.03, and I was exited here for 2.1. Meanwhile, on the downside, while price rolls against me, if I want to get out, also, my loss figures are better than buying the naked option. So I haven't been doing debit spreads for very long, but they're growing on me really quickly because I've always typically bought, the naked call option. And I've discussed this in videos, unless you're buying a naked call option here and price does that, if it does anything else, it's very hard to make money. So I like the put debit spreads. The other thing I'll say, it's very hard to pick when price is going to do that. I can have an analysis and be, say, all right, price is going to go up here, and I can project that length to go up. But, after it breaks out, it's hard to know what's going to happen there other than my expectation is for upside. And so, my expectation worked out. I had upside here, but then price immediately rolled back against me before it pushed higher. So put debit spread gives you a lot more leeway when price action doesn't just rocket up in your favor. So they're growing on me very quickly. And again, the values are not, with a naked option cost me 5.7 and the put debit spread costs 1.03. Well, if I want more action, I can just increase the number of contracts, times 5. So you keep the return on income figures, you just increase the number of contracts you're trading. So overall, I'm happy with that. It was, I did better than in percentage terms, I did better than buying the call option. So hopefully this analysis is useful to you. I recommend trying this. It's a bit harder to get your account set up so that you can buy debit spreads and sell credit spreads and that sort of thing, but it's worth the time in getting to that point where you can do it. If you like this video, please like it, please subscribe to the channel, and if you have any more recommendations on trading stuff, please let me know in the comments. Also, I'm on Twitter at Price Analyst. Thank you very much for watching, and we will see you next time.